Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, welcome back to YouTube. It's time for an update on gold and silver. And well. Everything continues to proceed as I have foreseen, in the words of the Emperor from Star Wars. But either way, that is what's going on. Right? We've been saying it's going to go higher. We've been saying it's going higher. It continues to go higher. And the breakout we've been anticipating and counting in silver for over 2 years is happening, and everything pretty much has worked out exactly as planned, which is pretty cool, right? But it also means that shit be getting crazy. Sorry to swear in the first minute or so, but either way, things be getting crazy. So we're going to start here on the monthly time frame and gold with some classical analysis, then we're going to work our way into all these Elliott wave counts and things like that, so we'll worry about that in a minute. So when I say things be getting crazy, things be getting properly like mad. So the MACD is at levels which we've never witnessed. It's just the most bullish, highest level of momentum we've ever recorded in the asset. It's absolutely off the chain. You know, RSI is at levels we haven't seen since 1980. Okay, which was the last great peak. This was grand super cycle degree up here, and we're now back at those levels on the monthly time frame. We are miles above all of our major exponential monthly moving averages, the 10, the 20, 16, 250. Everything trending higher and accelerating, looking absolutely bullish as hell. New green bar on the histogram as well. Now when we come down to the weekly time frame, things start to slow down a bit. We have divergence, and it's not confirmed divergence as we have no bearish pivot in place at the recent weekly high, but between the previous high on the closing basis and the last week's closing high, the MACD is showing divergence between current price and previous highs. So is the RSI. Okay, so there is a little bearish divergence, and if this is wave 3 into 4, as I have it as a triangle, into wave 5, that bearish divergence on this time frame makes complete sense. A large correction will occur sooner or later, taking us sideways, well, down and sideways. That's my primary count. That's what I think is on the cards. That's what we're going to talk about in a bit. On the daily time frame, however, there is no divergence between the end of this correction and the current highs. There has been some weakness over the shorter term between these recent highs on the RSI, between the higher highs in price and lower highs in the RSI, and a little bit of softening of momentum as well as the histogram started to die down. So we could be coming into a high here as well on a smaller wave degree. And that is essentially what I think is going on. So let's now come into the Elliott wave. So primary count. I know it's an absolute shit fest. We're going to tidy it up a bit, so don't worry. I'm going to hide these pitchforks for a start. I should really take these out of this folder. And we'll get rid of these extension targets as well, shall we? Because they make things a bit messy. So we completed this triangle at intermediate wave 4. And it was a really nice triangle. And we called this perfectly. 1 into 2 off of the base, through the base channel, and now running away in the 3. I have this as potentially close to completion. So if we come into the 8 hour, we can get all the smaller detail. So essentially, you know, a impulse is defined by like a wave 1, sometimes 1s and 2s stacking like we had here, sometimes bigger or smaller, and then we break out in a big strong 3, and then we get a bunch of stacking waves up here as well. Right, we stack at the bottom, we stack at the top, and we have a big run in the middle, and that's called a wave 3 extension in Elliott wave. Now we could have topped, or we could be moving into a 5th wave, extended 5th wave. Now I always give this the benefit of the doubt in the commodities market with gold, silver, oil, you name it, because 5th wave extensions are very common. You know, more, well, not very, but they're more common than they are in equities or elsewhere. So it may have topped here with the 5th wave. This is the orange count: 1, 2, 3, 4, 5, and now we're going to start a bigger correction back down. Or we've gone 1, 2, 3, 4, the yellow count here, and now this is 1 and 2 at minute degree. Now, the smaller time frame, we can break this down even more. We can say, well, from the high here in the 23rd of September, just 3 days ago, we put in either the wave 1 of an extended fifth, or we put in the fifth wave of 5 waves up into a larger wave 3, which is going to correct for a significant amount of time. And now we've come down in 3, so this could be completed, A, B, C, and then we go 1, 2, expanded flat pattern, 1, 2, 1, 2, and now we break out to the high. So if we break out of this triangular structure to the high, we're likely pursuing this fifth wave extension, and we're off to new highs again. And we will continue to push for new highs until we complete the larger 5 wave structure up. If we break down, then it's W, X and Y, and we complete the wave 2 here instead within the extension, and we continue higher from there. We will not know if it's anything bigger than that and greater than that for a significant amount of time. What the hell does that mean? Well, what it means is we have to break the upward trend of higher highs and higher lows, right? We have to have a clear daily, weekly and even monthly pivot up here, break down the momentum, and the opposite of what we've been seeing, all this constant bullishness, momentum increasing, relative strength increasing, that has to all fade away, and we have to have a significant time frame pivot up here instead. Okay, now if the orange count is correct, we've gone 3, we can have a 4 here, or we can have a 3 and a 4 here, probably there is better, 3, 4 and 5. Then what we can do is we can drag this 5 down to here, put it here, and then we can put the wave 3 here, and we can say this is the first move of a much broader wave 4. Right, I know you're probably thinking, what in the hell is he talking about? Well, unfortunately, Elliott wave is Elliott wave, and it is what it is. All you need to know in the short term, if this triangle breaks to the upside, we're likely extending to new highs again. If it breaks down, then we're looking for a low to form prior to this low here. So I'm just going to put a little invalidation point in. At 3627 spot 465. Break this, and it's highly likely that this was a pivot up here, and we're going into a larger correction. Rally before this and continue. Rally before this. 5 up, 3 back. We're likely going higher again. Break out of this triangle pattern to the upside, likely going higher again. You know, the thing's a rocket ship, guys. You can't expect me to be able to call the top. Okay, as I've said many times before on this channel, and I say frequently to my patrons, and I've proved it on multiple assets and multiple time frames, to argue to disagree with what the overriding opinion is. Bottoms are easy to call, right? Bottoms are way more obvious to call. Tops are way harder to call. Okay, it's just the way it is. You don't believe me? Look at all the wrecked bears. So many wrecked bears who keep trying to short markets, which will bend them over and fuck them. You know, because they keep trying to call tops. Bloody difficult to call tops. Quite easy to call lows. I pointed out on the SPY, on gold, on Bitcoin. We look for all the extremes, and they're often the lows, right? In fact, 99% of the time, well, 90% of the time, they're the lows. We proved it with the VIX, the PCC. We've used the ISM. We've used the University of Michigan. We've used all these different things. Momentum, RSI, exponential moving averages. All of these things combined, and we find stock market lows very reliably. And they're quite easy to call. Highs, very difficult to call, because things can just keep extending and extending and extending and weakening and weakening and weakening while still climbing a wall of worry, while still climbing higher. So if I had to, and I know I'm lecturing and I'm preaching again, if I had to insist that people not do one thing, it would be bearish before a pivot is in place. Never be calling the highs, ever. You are way better off over the long term on every chart we've observed calling the lows. That doesn't mean catch a falling knife. You still wait for a pivot to form and a rally to form, but you are far more likely to be right calling a low than you are calling a high. So lecture over. If we come through 3628 and fall lower, that will be the first clue, right, that this continuous upward trend of higher highs and higher lows that we've been in forever basically has broken. Now if we rally out of here, out of this triangle structure, continue to form ones and twos, we're likely off to new all-time highs again, and the top will be in when the top's in. Things are already crazily extreme. They're extreme beyond anyone could have imagined a couple of years ago, and no one would have believed if you told them. So stop trying to anticipate the high. That's what I'm saying. If there's any message to give out, it's that one. Okay, so that's the count on gold over the shorter term. So, a quick recap. We'll add these into the primary count. We've got an issue with the alternate count, the bearish one. Right, this called for the high all the way back, and the beginning of a much larger correction all the way back at 3,500, and this was an A wave down, and this was a very long-winded, I pointed out all the problems with it, B wave up. Well, that's now come back above. If we just turn off of log for a moment, it's come back above the 1618 extension of the wave A for a flat pattern to find the B. It's too high, so we've got to delete that now. So what we're going to do is we're going to get rid of all the stuff where it's been invalidated, and we're going to introduce a simple idea by shifting everything over. Right, and this will be a very bearish count, because instead of calling for a 3 into a 4 at a larger degree, this calls for the top of the top of the top. Right, massive bear market will ensue, and secret wet dream count at the top. This one, you can always hope that you get the chance to buy gold below £2,000 again, right, or $2,000 again. Right. Now, I don't want people to suffer ever. Never confuse my greed as a human being, but I'm just honest. There are very few people I find who will be honest with you. Right, I am greedy, and I want things to go my way. Right, that doesn't mean I want others to get hurt. It's just a side effect of the market we live in and the real world. The real world is a harsh place. Okay, so we're just going to shift everything up. We're going to fuck off all this complicated crap in the middle, and we're just going to shift the whole count up. We can leave all those little piddly bits, but there we go. We've got 1, 2, 3, 4, 5 into 3 into 4 into 5, and then this becomes the top of the top of the top of the top, tippity top, like so. 8 hour. We can flesh this out a little bit, maybe. I'm not sure where I put that 3 on the primary. No, same spot. Ah, I moved the 1 up higher. Where did I do it? 1, 2. 1, 2, there's a potential alternate. 1, 2 at the minute degree. I see. So bring that back up. 1, 2 again. 1, 2, 3, 4, and then 1, 2, 3, 4, 5 into an extended 5th again. By the looks of it, I will flesh this out in my own time. I'm not going to waste your time doing it now. Either way, that's basically what we're looking at. So let's zoom out to get our bearings. Okay, I know I'm making your head spin probably. So in this idea, from the lows of 2015-16, 1 into 2, 3 into 4, all of this is extended 5th. Like I said, extended 5ths at all wave degrees, all sub-wave degrees are possible in the commodities market and more common than they are in other places. This becomes cycle wave 1, massive correction into cycle wave 2. My bet would be $2,000. Right. That would be my bet. Now the reason I think it'd be is, you think it'd be that, is because it just comes straight back down to all-time high support. Right. Previous all-time highs back here in 2011, previous all-time highs throughout COVID here, multiple highs, 3 in a row. In fact, put another level in across all 3 of them, right, and extra support to boot. Right, and that is $2,064. That is a very likely place for the correction to come back to. If it were, remember this is not the primary count we're talking about, okay? This is not the primary count, so don't get your knickers in a twist. Got a lot, almost an insane amount of damage to do to the chart before this becomes the more likely count. But then again, the rally was insane, so anything's possible, isn't it? We live in crazy times. I hope you guys realise that if you're new to trading, if you're new to investing. I guess it's all relative to what you're used to in the time you've been doing something. It's hard for someone like me who's been here a long time to explain how fucking nuts things are at the moment. It really is a loopy time to be alive. But kind of a cool, and it's not cool, but it's always interesting, right? There's always cool stuff going on, new stuff going on, interesting stuff going on, and opportunities in amongst it. But it is a fascinating time to be alive. If you find financial markets interesting. I know a lot of people don't, but I do, so yeah, wild ride. So there you go, that's the new alternate count. This is all the same bar this last little bit where we've just taken the 3 to 4 to 5 and pushed it out higher. So this is still the same idea of the shorter term that we've just been dealing with on the primary count, right? That this is 5 waves up into a final high, the high of highs, right? Boom, boom. What would switch gold off? God, I don't know. What do you reckon would switch gold off, guys? What's been driving this? We know central banks have been big buyers. I actually heard from someone who was telling me the other day and showed me the figures for it that you wouldn't believe it, but retail have been net sellers, and it's mainly big institutions and central banks which have driven this rally. If that's true, retail showing up in force would be the top, right? So the average Joe finally gets sick of watching the chart go up and they're like, oh, I've heard that, I've got to buy some gold, I heard it on the telly. So they rush out and buy gold. Who are the institutions selling to? Retail crowd showing up. That would be the top. Right, so it's possible. If there's enough public hype about gold, we could say that retail's here and maybe that's the high. But if it continues to extend higher and retail does not pile in force, and they haven't yet, we could still keep going up. So I hope that makes sense. Long term though, regardless of whether we get a correction now or not, in the long term, it's a gigantic bull market. Just absolutely stupendous scale. Yeah, so we come all the way back to the monthly time frame. Grand Super Cycle 1 completed in 1980. A 20-year correction ensued into the lows of 2000. That was our first wave 2. All of this means that we are in Grand Super Cycle 3 of Super Cycle 2, with potentially cycle 1 of Super Cycle 3 about to come in. Who knows? Okay, we just know that this on the long term is an absolutely stupendously big bull market. Okay, that's what the original pitchfork looks like, by the way, in case you were wondering, well, we're at the top of the pitchfork. Yeah, well, that was a mod shift based off a base channel in log, mind you. So this is the original pitchfork. We're still, if we were to come up to the high of this thing to find Grand Super Cycle Wave 3, we'd be looking at $6,500 or higher, depending on how long it takes. $8,000, $10,000 gold, right? And then it's not over. It's another 20-year correction or whatever, and then off into Grand Super Cycle 5. So this thing will outlive me by a long way. Probably outlive a lot of you before it ever gets to the top of the 5. But I know this sounds like crazy bull porn and stuff, but markets on long-term trends like this, hundreds and hundreds of years, right? To try and call highs to these kind of things on any significant time frame, you're an idiot. You know, it's just an idiot. You know, you stick with the trend. Even the pullback we're anticipating in our bearish count brings us back, not even to threaten the lows of 2015. It brings us back into the highs of 2020 and 2021. And there will be people who are saying, oh, it's the total and utter collapse of the gold market. It's gone forever. No, it's not. It's a 44% blip in a gigantic multi-century bull market. Okay, so just keep your socks on. You know? Either way, so there you go. There's me ranting and raving about gold. I know I've been a bit hyperactive today. I've just come off of the back of recording 6 or 7 asset reviews for my patrons as well, and I'm a bit wired because I drank too much coffee. So I figured I'd get this done while I had the energy. So that's gold. So to sum up finally, after all this bloody talk, in the short term, we are in a 5th wave at intermediate and minor degree, looking for the completion of primary wave 3, whether we break out of this triangle in the shorter term or we correct a little bit lower as an ABC. The bull market in the short term is still intact above 3628. We can anticipate higher highs one way or another from here. If that breaks down, we can anticipate a larger wave high completed here, and then that opens up the doors to multiple bearish counts, which could be anything from a wave 4 at primary degree, retracing for several weeks and months, to a total and utter collapse. So we've got a lot to think about. If that price level breaks, we can come back and review. In the meantime, trend is intact, likely moving higher over the next few weeks. Right, so silver. exactly what we've been anticipating since the lows of 2020 and the subsequent low of 2022 is playing out, which is a wave 3 extension at cycle wave degree. This correction took us from 2011 into the lows of 2020. This was another wave 1-2 at cycle degree. We then put in a primary wave degree from the highs of 2020 into the lows of 22. And now we're extending in primary wave degree 3 into intermediate degree, into minor degree, into minute degree, into minuet degree, and now we're breaking out in that 3 of 3s. Okay, that vertical move. You know how I spoke earlier about how a chart goes like this: 1, 2, 1, 2, 1, 2, 1, 2, 3. Big obvious climb in the 3, and then it goes 3, 4, 3, 4, 3, 4, 5. Right, and that's the wave 3 extension, with the 3 being the big sticky uppy bit in the middle. And that's what we got here, the big sticky uppy bit in the middle. That's the 3 of the 3, and now we'll start overlapping at the top end. This tends to be when retail show up, right? We start to chop them up and eat them up. Leverage traders and stuff start to come in here thinking they're clever, thinking they're going to make up a quick buck, but the volatility will start to build up and eat them alive. Yeah, and all you got to do is just sit on the silver that you own, and it's just going to go sideways and up, sideways and up, sideways and up, and it's all gravy, baby. You know, so just chill. No, but either way, so anticipating a minuet wave 3 at some point or another. Once again, you don't call tops, you don't anticipate them before they happen, but it looks like we've got another 5 wave move up. Sooner or later this will peak, okay, and we'll start to correct in silver again, and we'll go sideways for a while into a wave 4, and then we'll go back up, and then we'll go sideways for a while. And this is likely what I'm anticipating now. So we've done a lot of the work. Okay, we've been keeping track of this thing for years, and it's finally paying dividends for us. You know, I've been a silver stacker for a long time. 1 into 2, 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 and here's that 3 of 3 breaking out now. Okay, so if this is all the stacky front end, we've got all the stacky back end to do, haven't we? All the overlapping stuff here. Now it could continue because wave 5 extensions at any wave degree. This is 3 into 4, 5, 3 into 4, 5. Look how big this 5 was. Right, we could continue to get a bunch of 5th wave extensions, really melting up the price. But you have to remember, wherever you melt up, if you melt up into a 5th wave here, you've got to come back deeper to get back into the prior wave 4. You melt up again, you've got to come back deeper to get into the prior wave 4. Same on. So all it means really is the more you melt up in the shorter term, the more volatility there is in the price over the longer term, because you've got to come back and correct. You've got to find support. You've got to find buyers to continue this party, right? This is all wrong, okay, if we reverse this rally. If we undo all of these gains and we come crashing down through all of these lows at micro, subminuet and minuet degree, then we did something completely different. Okay, and that opens the door to a lot of different ideas, really. So let's cover some of those. We've covered the bullish idea, 1 2 1 2 1 2 1 2. We are building up some phenomenal momentum. We'll talk classical analysis in a bit, but we're going to have to start doing some sideways work, some volatility, some whipping backwards and forwards, some quick, nasty, scary sell-offs, rallies. You know, just sideways chop. We need to start chopping. We don't need to, we could continue to blow up, but I suspect we're going to start chopping. Okay? Because we've had a lot of the fun already. Right, so what other ideas have we got? Well, where are we? Let's bring up the long-term count again. Alternate idea, this is just 5 waves up, and we've done 1 and 2. We've done 3 and 4, and all of this explosive move here is not wave 1s and 2s stacking up into a wave 3. All of it's just a single wave 5 that's extending and blowing up. Right, wave 5 extension in the commodities market. Like I said, it happens. Now, if this is the case, this means that a larger correction is on the cards. We're anticipating that wave 4 to come in gold on a larger time frame. It could be the same here in silver, where we go 1, 2, 3, 4 and 5, and have a really big melt up now, and then a really big correction. to get that wave 4. But like I said, we can't call the top until the top's here. And it's not yet. I just happen to be recording this on a day where it's still basically at all-time highs. Well, not all-time highs. It's not far off of them, though. This is the SLV we're talking about. Silver CFD pricing, right, is already above the previous all-time high back in 2011. Right, we're looking to clear 4836. If you're like me and you're measuring this in GBP on your own purchases, then we're already at all-time highs in pounds pence terms rather than dollar terms. Okay. So alternatively, what's the most bearish idea I've got? Well, it's still back up this idea. I think this is going to have to get relabeled as WAB sooner or later, though, when we approach 89% retracement from a 2011 high. Not sure we're there yet. We're at the 78.6, so it still stays labelled WXY for the meantime. Right, so this is the super bearish idea. I haven't bothered with the details. The details are irrelevant until we get a pivot in place. Yeah, it's just irrelevant because it's not giving us any clues, and it won't give us any clues until it's peaked. No, it just won't. It won't behave like you're anticipating it to. Momentum's too strong. Relative strength is too strong. Everything's going up bullish. Okay. And even if this were to extend to all-time highs, we'd just change the labelling. A to B instead of W to X to accommodate a flat pattern. And this would become 5 waves down rather than 3. So like I said, you just can't really call an end to this. What we can say is what are the likely extension targets for a third wave. Now, when I say third wave, I'm not saying wave 3. Wave 3 in an impulse is a third wave, but a C wave is also a third wave. So a third of a sequence, and third waves tend to elicit a fair bit of strength and can sometimes appear stronger than their A wave equivalents. Now in this case, we are looking, let's get this one out of the way because it's confusing me. We've gone beyond the 138.2 extension for a wave C or a wave 3. 1618 is above our heads. If we hit the 1618 at $42.94 in the SLV, it is more likely that that's a wave 3 of 5 as opposed to a C. In other words, this becomes more likely count than 3 into here and then falling. Now if it's the extended count where it's 1 2 1 2 1 2 1 2 for days, that pushes the wave 3 target much higher. It could still stop at 1618, but more likely to find 2618, which would be around $60. Okay, so that's really bullish, isn't it? But that would be the bearish count. It was all just a big head fuck. 3 waves up and then we collapse. But my bet's on the primary count as it has been for years. Right. That it's party time finally. We've done a fair bit of that wave 3 already. It could continue to extend into a fifth of a 3, but then we are going to start overlapping and going sideways for a significant amount of time. We'll be making sideways move, new high, sideways move, new high, sideways move. And it's a trader's market during that period. You know, professional traders market, not a gambler's market. But the same thing applies, right? If you sat on the silver all this time, your quid's in and you're winning. You know, you're winning big time, and you're probably going to keep winning for a long time yet. All right, so anyway, let's finish with a little bit of simple classical analysis, because I didn't touch that in silver. And we've got day time frame. We're above the 10, the 20, 60, 250 exponential moving averages, and MACD's breaking out of that range, coming back to the highs that we set during June, which are these highs here. OBV confirms higher highs and higher lows on cumulative volume. RSI looking strong with no obvious divergence on the daily time frame. Weekly time frame, RSI breaking out with no divergence to prior highs. OBV breaking out with no divergence to prior highs. MACD breaking out with no divergence to prior highs. Bullish as fuck, putting it simply. Monthly time frame, same story, breaking out to all-time highs all over the place. So I think under this kind of circumstance, everyone gets psychologically bullish super bullish, but their time frame, their understanding of the time frame, because they're not thinking 1-2 over 10 years, 1-2 over 3 years, whatever, their time frame shrinks to a point where they'll put themselves on the sushi board and just get sliced up, because they're just going to turn into a bunch of fucking idiots. And I'm sorry if you're taking offence, I'm here to help, but I'm just saying, expand your time horizon, look at the chart over the long term, be prepared for volatility, okay? Because if everyone gets super hyper bullish and starts leveraging up, oh, I'm going tenfold, I'm going in 10 times leverage, 50 times leverage, whatever, I'm just going to do some crazy YOLO silver trades because we're going to the moon, you can guarantee that will add to the volatility and eat these people alive, right? And then you'll get your big choppy retracements, sideways movements, back and forth, all that volatility, right? But if we zoom out and look at the indicators over the long term, look at the Elliott wave count over the long term, we've got no reason to think anything other than the probability is we go to new all-time highs first, and then we continue beyond that. It won't be a rocket, it won't be a straight line. There will be a lot of sideways shenanigans, but that's where I think we're going. The only way I think that breaks down is if we come crashing through these previous highs. So a big warning sign would be that we come back into this territory here, because we can't have wave 4s overlapping the wave 1s. So if we come crashing all the way back into this, that's really a bad luck for silver. But at the moment, things look sound as a pound. Alright then guys, there you go. There's a rather excitable backwards and forward analysis of gold and silver this week. I know I've gone over a lot of different things. I've flopped back and forth. Like I said, I'm a little bit caffeine overdosed at the moment, so my brain's running at 100 miles an hour. But either way, forgive my bad language and my rudeness if I have been. And if you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And feel free to, share your opinion in the comment section below. Are you a silver stacker? Are you finally being rewarded for your patience? I hope you are. I had a thought just the other day about all the patient people who've been stacking over the years, and I hope they're really enjoying themselves right now. You've earned it. Alright, and let's hope this is just the beginning for you guys. Anyway, take care of yourselves. I'll be back with you as soon as I can. All the best. Bye bye.